So let's pull this picture back up. Man, I suck with computers. All right, here we go. So this is what I posted, right? Now that we know where they all come from, this is the 1 hour target with the swing low to the left, right? So this is, it broke, it came down and it bounced. So it's now support, and then we broke back through it. So now it's gonna hold up as resistance. That's how support and resistance works once you break it, and then usually, 9 times out of 10, it'll switch to resistance or support. In this case, when we come back up to it, it should hold up as resistance. This is a previous day, or sorry, previous all-time highs. This is a gap with a support or resistance. Well, it should hold up as support now, so it was old resistance. So that's why I have those. So I was just frustrated with yesterday on how choppy it was. Like we had the push down, right? We had this push down, and I was expecting once we made this gap, I was expecting for us to come up. This is what we should have done, right? We should have come up, rebalanced, and then continued lower. But we didn't do anything. We basically sat in this same candle all day, and I got chopped up, and I'm assuming a lot of other people got chopped up with the same, especially when you see this candle, it opened here, and it kind of looks like, or even this here, like I think actually came down, swept the bottom of this green candle, and it should have went higher, but it didn't, right? So it's just super frustrating when you have days like today or yesterday. So so I said in that post, I said I'm not touching anything until it hits one of these lines, aka rebalances, shows us a direction, because if you have this, you're just gambling. There's just no direction, right? So when you gotta formulate a plan, right? If you don't have a plan, you're kind of just steering blindly, right? So that was my plan. I'm not touching anything until one of these lines get hit. So this was our range today, and this is kind of why I like these yellow lines, these targets, is because it just kind of shows you where we're at and where we're going. They're just it's just like opening your eyes behind the steering wheel, showing you the range. And I kind of want to use an analogy that I haven't used before. Um, I had an old mentor, like how to explain the stock market, right? Because a lot of people kind of skip over like what the stock market actually is, and what how it operates, and anything like that. And he always referenced like buying an Xbox at Christmas time, right? Supply and demand, how the stocks go up and down. And I love that analogy a lot, but it's more for like low cap stocks where there's a low supply of stocks. So because we play large cap, we play, well, mostly in Savvy Traders, we're just futures, right? So your NQ and your gold, like it's an unlimited, like it's very liquid. You don't, there's really no supply or demand when it comes to these very large assets. So with that in mind, I was thinking today what kind of analogy I would use to explain the stock market in a whole. And I kind of think of it as like what's your favorite team? I'm gonna go with the Blue Jays, okay? Buying a ticket for the Blue Jays is how I'm gonna just for the rest of the video, I'm gonna reference the stock or the price as a ticket, all right? As a ticket sales, all right? So right now we have a range, And we know we're in a range because we have a very clear two targets. And ICT, they have these fair value gaps, and it's very simple to explain. It's the price that's fair, right? So it's a fair value gap. But the way I look at it is it's a range. So these gaps are just represent a range of price for the tickets, all right? So how does the tickets so when you're buying a ticket, what are you going to do? You're going to go on Ticketmaster or whatever, you're going to buy your tickets. So that's going to be the fair, not even fair, that's going to be like a premium, kind of a premium price for your ticket, right? So what does a scalper do? A scalper will go in and buy up all the tickets and sell them to the consumer for a higher price. So this is where the scalpers are buying. They're buying at the master ticket price. Like this is where he's getting all of his tickets bought, right? So this is where basically the scalper is. All right. Now, if you want tickets to go see the game, you got two choices. You're gonna have to buy it from Ticketmaster, or maybe they're sold out, so you're gonna have to go to the scalper. Well, the scalper, so Ticketmaster, they're out of tickets, so you have no choice but to go, basically go to the scalper, right? So now you're at premium price. So discount price, premium price, right? Up here. Okay? Discount, premium. So like very simple, very very elementary school, right? But where I'm trying to go with this is that we're in a very clear cut range, and I want to make it as simple as possible because literally this is how trading is supposed to be. Trading is supposed to be very very boring, very very simple. All right. So now you're probably asking yourself, okay, Trevor, um, we're in a range, we get it, all right? Discount premium, easy. Like it's very simple. How do we get out of this range? What's gonna make us get out of this range? Well, I'm glad you asked. What would what would what would make the price of a ticket, a Blue Jays ticket, go up or down? Well, maybe they're like this year, maybe they're breaking all of their records, right? They're breaking um, they're breaking records um, in the amount of like winning streaks in a row, right? So they're doing extremely well. So is that going to make the ticket price go up? Well, of course it is. They're doing extremely well. People, they get on the bandwagon, as the saying goes. So we got the True Blues, which are the season ticket holders. So they're paying the same price no matter what. But when the stock or when the tickets do really well, the price goes up. So what does that mean? Well, it means that there's going to be a new range. And that's kind of where I'm driving towards here. I want you guys to understand. Like if there's no reason for the market or the ticket sales to go drastically one way or the other, that just means that we're just chilling out. We're just, if we're if you want to buy a ticket, you want to buy a ticket at a discounted price and you want to sell it at a premium price. All right? This is the range that we're in. There's no reason to come out of this range until A, we start winning a lot of games, or B, we start losing a lot of games. And that's really the only it's literally that easy. So what would happen what would have to happen in the stock market for us to get out of this range? Well, technically, something good or bad will have to happen, right? So, and also maybe the like the season is ending, right? So in the stock market we have seasons. Right now we're nearing the end of summer, right? Typically, historically, the stock market will climb over the summertime, and it's due to low volume. And low volume just means everybody's comfy. They're just constantly buying and buying and buying, right? So once everybody kind of gets back to work, they're going to start taking profits. And so that's the end of the season. So now that we're going out of season, maybe it's either we might get a jump, right? We might come out of the range upwards for people, the greed will kick in, and then there'll be massive selling pressure up here for people taking profits, right? So, and then that will be like a playoff game and they're lost, right? So they shot for the fences, they missed, and will come crashing down after that, right? So I hope that analogy kind of helps a little bit on just how simple you can think of the stock market. Um, but basically, so we're in this range right now, and until we break out of it with a gap, we're gonna stay in this. We're gonna be in here. So let's jump down. So on the 1 hour, it looks super clean, but let's go down to the 15 minute because the 15 minute is where you actually see um, the clean price action. And I'll actually I'll show you where I took my trade this morning. And I was kind of just a one and done this morning, to be honest. I was busy, and I just didn't really have the time or energy to spend a lot of it on the charts. So this is basically, we came down this 8:30 candle. We came down, right? And we like look, it's not perfect, but for a news dump like this is not bad. Remember, this is the previous all-time high, um, aka daily target. And when I say target, it just means that's where the price wants to rebalance to. And because we all know these ranges are massive targets, these fair value gaps, the range, they like to be revisited. So this is like the middle of the daily range. Um, so we have that marked out in the previous all-time high, and then this is the hourly. So on a smaller time frame, this is the target for that, right? So we came down and we rebalanced to the bottom of the range. So this is pretty freaking nice. And then I'm not going to get into the H's right now, but basically this is a clear cut, and I mean clear cut, does not get any better of an H. All right? We come down and then we just make a perfect H. All right? So what is supposed to happen with an H? Well, it's showing um, when we come down, we're supposed to come back up, rebalance, and then continue. That's kind of the way the market likes to operate, right? But when we get no continuation, it's called a failed H because it failed to do its job. The job was to come down, rebalance, continue. That's the job that it had. It failed to do so. So if you can't go down, you have to go back up, right? Because this is the bottom of the range. So once we came down, this was at 9 o'clock, you know, and then we're making a bear flag technically, right? But I don't see it as a bear flag. I see it as like this is kind of your bear flag, right? If you're into that kind of thing, which I am. I keep these, I don't draw them out, but I keep it in mind, right? So even a bear flag is supposed to be, you come down, it's the opposite of bull flag, right? bear flag, you come down, you make the flag, and then you're supposed to break to the downside. That's the what a bear flag is supposed to do. But I just see this as a failed H, especially that we retested that target, the bottom of the range, and then we decided to do it again. And it's more or less just timing, right? Price and time and price, they have to align sometimes. And the timing wasn't lining up. If we had have pushed this H a little further forward, closer to open, it would have just failed and it would have made the W straight up, right? Um, but because it was just the timing was off, this is basically I actually got in exactly 1 minute before open, and let's go down to 1 minute. And the reason why I never played the 1 minute, I was just watching the clock, and I knew that there was no reason to come back down. So if you look at the 1 minute, we were so in real time, I seen us get back above the line right before market open. We were like right here. So I entered right here, basically the bottom of this candle. I was exactly 1 minute um, before market open, and I did get into drawdown, but I was not afraid at all. I had zero fear going into this, just because of the chart, and we were at the odds were so far in my favor. I had literally zero. I had so much confidence in this trade. I should have sized up, but it was just the only reason was because at market open. So yes, maybe it was a little higher risk at market open, but I was so confident. Like I almost never pull the trigger right at market open, but this was just so freaking nice with all of this support here. And yeah, so that was my trade, and I'd have to pull it up, but I was in it for a minute. I was in it for a minute. I didn't catch the whole move, but I think I was I did get out and then re-entered a couple times, but just playing the upside. But either way, I don't want to get sidetracked. So that was my trade today. Let's go back to the 15 minute because it really shows you. The 15 minute just paints such a clear picture. Like it's so freaking clear. So look at, we come down, we basically hold, right? We come up, we tried to rebalance, but it's so strong that it was just undeniable we wanted this. We wanted this other rebalance, right? So now the range is drawn out. Like we already seen it ahead of time, but once it verifies it, you can just play inside the range. There's no reason to break out of here. And the proper way to play support and resistance is, well, sorry, not the proper way. There's no proper way to play anything really. The safest way to play support and resistance is with a pullback, a break and retest, right? Because we really don't know. Like, and when we're in real time, we really don't know if something is gonna, excuse me, if something's gonna hold up or break, right? So the safest way to play any type of support or resistance is after it breaks, or, well, depends on what kind of trader you are. And it's really important to figure that out because, well, here's a great example of playing like a break. So we come up, right? So this is when it comes up here and it forms a support line. So we have a double bottom here. Okay? So we basically, this is a clear cut support. So when you see something like this, you can put the line, and now that's your support line. Okay, perfect. So now that we have the support line, how do we play it, Trevor? What's the safest, absolute safest way you can play that line? Well, I'll tell you, because I'm more of a dip buyer than I am a breakout trader. I've been burnt so many times on continuation plays. There, the odds are more in your favor for the support to hold up, for the resistance to hold up. It typically, um, well, even look at here, right? It bounced off it twice and broke it once. So the odds are a 2 to 1. Their odds are always better that it holds, and you'll see that time and time again. You'll for every time the support or resistance breaks, it'll hold up like at least 2 to 10 times before that, right? So the odds are always in your favor if you're playing either a retest or a bounce. Just remember that, and we're always trying to play the probabilities, right? So it's super, super, super important to put the odds in your favor. And I've been burnt so many fucking times trying to play breakouts. I honestly try not to do it anymore. So, and with that said, I still do because nobody's perfect and we all want to trade and we all want to make money. I just maybe do it smaller size, right? You got to manage your bad habits. So that's one of my bad habits. I manage it by sizing down. So after we break, what do we do now? Well, this is the most important part of this entire lesson right here, and this is the biggest gem that you're ever going to see from me, is this right here. If you don't have this after a break, it's not broken. In my opinion, that's my opinion. If you get the break and then a gap, it's been broken. All right? This right here is the key. This is what opens up this this door right here. Without this door, this key, this isn't truly broken. And I know it sucks because look at like there's no entry here yet. Okay, there's nothing. There's no entry. And so this is where the support broke and you don't get an entry, which really is painful, but until we retest it. So this is the first retest. So now that you see that, this is support, support, broken support. So we know where the support is. We know it's going to hold up as resistance next time. Why do we know that? Because, well, we broke it. And the reason why we know it was broken is because of this gap. Now, I'm not saying it always happens like this because it was just because yesterday was this. It should have not been like that. We should have, and that's why yesterday was frustrating for me, is because we should have, once this gap was formed, we should have came back, tested this, and then dropped. But it didn't work out that way. We didn't get it until the next day. But look at this is the safest way um, to play any type of support or resistance. That is your break and retest. And I'm telling you guys right now, your win rate will go through the roof if you are patient and you wait for those steps. If you wait for the proper break with a gap and then the proper retest, and you get it on the first retest, the probability of it holding is so high. It is absolutely so high. And I know this big wick is scary, but just play the here, let's drop down. That was at 10:30. Just play the red to green or the green to red. That's literally, let's go down to the 5 minute, see what that looked like. So yeah, it sucked. Like it probably would have stopped you out. I'm not gonna lie. This is where I wouldn't be playing this is if you're playing the breakout through this, that's where you get fucked. So you would have been burnt. You definitely would have been burnt playing the upside, right? I hope everybody agrees with that. If you're playing the breakout here, this is why I'm not a breakout trader. If you're playing this as this is resistance and you're playing the upside here, you're being that's a breakout trade. That you're gonna get smoked on those at least 2 out of 3 times. I'm telling you guys right now. It is so hard to be a breakout trader, and it takes a lot of screen time, and you got to be able to read the depth of market, and it's just and I'm telling you, it is the hardest type of trader to be. So just keep that in the back of your mind. So let's go back. So anyways, the red to green. So the way I would have played this, I didn't. I wish I did. But basically, I like to go just keep it on the 15 minute and on the 50 because it's so clear. Look at it. If I knew that 9 times out of 10 this is going to hold up, even in real time, it looks like it's breaking, but just so this candle, it opened here, it went up, so it was green. When it comes back to red, that's when you enter. And unfortunately, your stop was 17 points away. Is that right? No. What is that? No, it's more than that. It's over 20 points away. So it sucks, but that's just when you have to size down. And it really wouldn't have mattered because even if you had 5 micros, so what? It's a $200 stop, but look at the fucking gains you would have got. Like that is a fucking banger trade. That's 100 points almost. No, it's yeah, almost 100 points. No, it's over 100 points. Sorry, my bad. It's 120 points, right? So, where am I going with this? Look at the range that you're in. Look at your support and resistance, whether it be Brad's levels, these targets. It's easy to find these. That's why I want to drill these into you because I can't I'm not on the charts. I am on them quite a bit, but if you guys do this on your own, it's gonna show you guys. Just do the 1 hour. Just stick to one. That's what I've been doing lately. Stick to the one time frame. Only chart them on the 1 hour to start off with. All right. So just take a look at every single gap. Um, so this one is where I got this from, right? This would have been the last one I put on. Yeah, it was. So I put this on as soon as this was made. So at 11 o'clock, or sorry, I guess once we were down here. So once this candle, I guess at the end of this, so yeah, so at 12 o'clock, once this candle closed and made this gap, this is when this line went on, right? So boom. And this is exactly where I get it from. It's just this range gap with the very closest swing low to the left, which is right there. Can you guys see that? And it happens to be a double bottom, which is so nice. So nice. So just do that on your own charts, like without, me posting it. Like you guys will be able to see them quicker than me because I'm just on my phone most of the time, right? So just every single gap on the hourly, take a look to the left, see if there's a clear cut old old support or resistance, put the line there, wait for it to come back to there, and boom, baby. Play those red to greens on the 15s. Man, those are nice. Anyways, that's all I got for you guys tonight. I hope you guys got something out of that. Put these yellow lines on your charts and man, you'll be amazed. Honestly, you will be. You'll be absolutely blown away. Anyways, that's it for me.